Correct, and Justin and Nia. So when value investing, I understand the concept is to hold for the long term, but I don't see much content out there on selling. So I'm curious to know, in the long term, 10 years down the road, when is a good time to sell or to take profits, or in the worst case scenario, when to jump ship. What would kind of be some catalysts to jump ship early? Appreciate the content, man. Take it easy. Thank you.
So this is a really interesting question as a personal investor. If I were still working at a hedge fund, the answer is when it gets at your price target or higher than your price target. As a longer term investor that isn't really tied to hedge fund annual periods or quarterly period or like return periods, I would say when you don't like the business as it relates to the valuation anymore, right? So there's no reason why Tesla ripped to 2,000 a share. I'm selling a bit. But do I love the business? Yeah. And am I going to sell all of it? The answer is no, because I'll tell you why. Tesla was overpriced at around 250. I believe it. Let me just look back. Tesla. You're talking about 1, 2, 3, like 5 years. 5 years. It just underperformed because it was overvalued compared to its earnings and growth. And then, but like if you still like the business and it's still a position, right? Sometimes you just can't predict when the thing rips, right? Because in the end, fundamentals and valuation matter. So if you're buying in Tesla early at 15 times EBITDA or 15 times sales, right? At 15 times sales, right? And sales are whatever. So you're buying at 15 and sales are $1, right? You're going to underperform as they grow. If you still like the business will keep growing and compounding. And then, but you don't know. So the next year it'll be 12 times sales. And the following year it'll be 10 times sales. And the following year it'll be 7 times sales. And the following year it'll be 5 times sales. And the following year it'll be 3 times sales. And you don't know when it pops, especially for such a hypey stock, right? But if you like that business, what I'm telling you is if the core fundamentals are compounding on itself for the foreseeable future, then it almost like it almost nullifies a bit your buy-in price because we're in this. Hopefully, you're in this with me for decades, right? Like I'm young. Some of you are much younger than me, and you don't need that money. Like get off your butt and go like earn a high earning W-2. But we're not going to be like cashing out until later and we're older. Like I'm not touching my stocks till like a decade. I'm buying more stocks, right? At least a decade, right? I'm at least a decade. So the whole point is if you like the business and you believe it's going to compound over the next decade or two, but when you stop thinking about that, or if the valuation is just so astronomically asinine, like Tesla's is today, I would reduce my exposure because what you're setting yourself up with Tesla. And again, look, I'm going to get flack about Tesla because I didn't like it at 1500, right? And they're like, well, I made such a crazy profit on, it going from 15 to 2000. Again, good job at the casino, right? No one could have predicted 1500 to 2000. Like no one can. No one can. This looks like to me, you know what this looks like to me? Another asset I really like. This looks like to me Bitcoin in 2017. Okay? And so if you bought Bitcoin at 15,000 in 2017, like you underperformed the market for 3 years and you're finally getting back to break even. It's not a bad decision it just wasn't optimal, right? So all that to say, answering your question, sell when you don't, like the first thing to sell for these long-term things like this is when you don't believe the business will continue compounding. That's like the biggest reason to sell. If you don't believe in the business model, or you believe the business model is getting attacked and it's going to start losing ground, or growth is really going to kind of tail off. Or sell when you still really like the business, but like the valuation is so through the roof that you just can't justify it anymore. So that's why I see a lot of questions about like you guys are like, I feel like you're
I'm basically on AIM
Peloton
over here.
Yeah. So Peloton might be a little bit overpriced, but I don't really know what the discount rate is in today's market with the zero interest rate environment. So Peloton, like I'm keeping it. Spotify, I'm keeping it. So that's that.